Okay, so we'll call the meeting to order. The first order of business, I think, is we need a motion to approve the minutes from our last meeting.
I make the motion to approve.
George,
Second it.
that's passed. The next topic, and I think the main topic for the meeting is.
Sorry,
to-
Chairman, before you move to item 2, can I ask a question on the minutes? I approve the minutes, but a matter arising. There's a point, it's item 3, I think, about internal audit and finding some internal audit firms we could perhaps work with. Is there, I think, I don't have the minutes open. I think we're going to come back to that in 6
Yeah.
weeks.
Yeah.
Does anyone have an update on that?
We do have some firms. The issue is going to be in regards to those firms having the resources to take.
Sorry.
We have some names of firms, but
Yes.
the problem that's coming up is the resources for all those different firms. They're struggling with their own resources for their current clients,
Yeah,
as opposed to taking on additional clients. I've seen, within the GFOA for Connecticut, people going, finance directors asking, is anybody having problems with new audit firms? Because, they've got to go out for an RFP, but to take on a new client right now, not to say we won't go out, but we do have names.
you
that
do
are
have some
going out.
names of
Yeah,
firms.
we definitely have names, but we know it's going to be a problem from a resource.
Resource,
standpoint.
yeah. Okay.
Yeah, and we talked a little bit, and there's also been you got the financial statements going on, and some staffing issues and so on. So,
Yes.
so I
and
think
a conversion and
it'll be a little bit later.
Yeah, I mean, it's just.
Yeah.
Yeah. Okay. So the main topic for the meeting really is to just talk about the status of the year-end financial information and to get an update on the audit and, any issues, concerns, understand the timing going forward and so on. So that's kind of the next broad area of discussion that we want to have. So what I thought we could do is we've got both Sean with the Board of Education information, the annual report that I think came out maybe a month ago or something like that, and the status of the town, and then Joe's on to hopefully be able to confirm whatever Ann says about the financial statements and the audit and so on, and anything else. So I'll leave it up to you as to. I think the committee has copies of the annual report from Sean, and maybe some couple page nice summary information from Ann. And so maybe
and then I'll finish up with start with the audit. Okay.
Any one of these?
Yes.
Stay to the right?
Yeah.
okay, good.
Move to the left a little bit so they can see you.
No, I'll move the camera.
Oh.
Well,
Okay, if I take this off?
Brian, you could move over here.
Good morning, everybody.
Morning.
Okay, so this discussion is about the unaudited full year 22 financial report for the New Canaan Board of Education. The report is subject to any potential changes resulting from the audit that is currently underway. Should there be any adjustments, they would be reflected in the comprehensive annual financial report of the town. When the report package was submitted several weeks ago, there were 3 budget transfers totaling 1.567 million associated with fully funding the ISF for the health plan that were approved by the Board of Ed at various times during the year, in the spring and one in the summer. And these are reflected in the results, but at that time were not entered by the town. My understanding now is that those entries have been made, so we are in sync as of this point. Now to the year-end financials for full year 22 overall, and there's a summary on starting at page 5, but for full year 22, New Canaan Board of Ed closed the fiscal year for 22 with actuals of 91,358,861, with remaining encumbrances of 581 $1,000, resulting in a total expenditure of 91,940,816. This compares to our original budget of 92,274,068, leaving an available balance of 333,252, or 0.4%, which will be returned to the town. Without the approximately $1.6 million of transfers related to the ISF transfers, the remaining balance would have been approximately 1.9 million. There were several areas that facilitated the transfers and the remaining balance at the end of the year. Salaries closed about $1 million below the original budget and was driven by primarily by four things. FTEs were 3.70 below budget. There was savings from lower backfills, lower cost backfills, and substitutes were below budget as well. Relating to substitutes, we did have some substitute expense related to teachers on leave of absence, but those were funded out of the ESSER grants. In purchase services overall, we came in approximately $1 million below budget and was primarily driven by two areas: transportation under budget by 460,000, and out of district tuition $650,000 attributable to keeping students in the district as opposed to out of district placements. As mentioned, the $1.6 million of savings was transferred to the ISF. In addition, some of the savings was redirected to heating and electricity, which came in higher than budgeted, and to some extent to equipment related to higher than anticipated need for replacement of damaged Chromebooks. So that's for the operating fund. Quickly on the grant fund, which will include a summary of the ESSER and ARP. Overall, approximately 50% of the available grant funds of $3.4 million were expended in full year 22 fiscal year. The remaining $1.7 million balance is expected to be utilized in full year 23. And as it relates to the ARP funds, those will be utilized in 23 and 24. The largest, there are several COVID-related grants totaling 1.9 million. The largest of the COVID-related funds is the ARP fund with a award of $1,062,000. These funds come with very stringent eligibility guidelines, primarily directed at learning loss, mental health, and other issues related to the pandemic. To date, $220,000 of the $1.1 million has been expended, leaving a balance of $842,000 to be spent in full year 23 and full year 24. These funds are and will be used primarily for reading and writing coaches, social worker, teachers, summer enrichment needed to close learning gaps. There's also a ARP IDEA grant for $236,000, which is being used to fund staffing for literacy academy, a psychologist, testing supplies, and for fitting up the kitchen for launch at Saks Middle School. ESSER 2 SPED recovery grant of $80,000 is being spent on behavior consulting services, testing materials, student evaluations, and Orton Gillingham training, which is specialized approach to teaching literacy, spelling, reading, writing for students who struggle with that. Food services overall, and the summary is on page 3, and also the details provided on 12 to 13. Overall financials for the school lunch program, revenues closed the year at 2.466 million compared to a budget of 2.494, a shortfall of 28,000 or 1.1%. On a year-to-year basis, revenues rebounded and were up $1,170,000 or plus 90%. Salaries of 944,000 closed under budget by 27, but were up $10,000 year to year, about 1%. The big news item in this is the product cost, including food and supplies, came in at 1.418 million, which was higher than budget by 163,000 or 13%. And on a year-to-year basis was up 598,000 or 73%. and consistent with inflationary pressures that we're all seeing in today's.
That's what
market.
that's what that
marketplace.
reflects.
As a result, the net loss, there was a net loss in food services of $160,000 compared to a budgeted profit of 268.
How much of a
I'll
difference did
stop
you,
there.
how much of a difference did you say that was versus the prior year?
Versus the prior year for product,
Yeah, you said it was up a certain percent,
up 73%,
73%.
73%.
Wow,
Yeah, well, revenue was up too, so.
I know, but
So there's obviously direct costs associated with that. But I think the
Just-
biggest piece of that is the inflationary pressure.
yeah.
I'll stop there.
Thank you.
You're welcome.
Higher than the 8% that we hear.
Yeah. Exactly. Exactly. Okay. Thank you very much.
Good morning.
Any comments or,
No, it's a good report. Thank you.
thank you.
Morning. On the town side, I'll start with the revenues on the second page. Our budgeted was 149.2 million. We came in at 151.8. And as you can imagine, the majority of that is conveyance fees, building permits because of the environment, the current environment, and our tax collection. Our investment income has not been where we would like it to be. It has not been for a couple of years, obviously. But the treasurer is working on that to try and see what additional returns can be picked up with the market changing as it is right now.
Just a question, why would the tax collections be higher?
So we
Is
budget,
that a higher percent collected? Is that,
yeah,
what it is?
our collection rate, what we budget as a collection rate versus what we actually collect.
So it's
there is a
just
difference
a
in that, and
good,
that's-
a good collection rate.
So the current collection, the fiscal year 22 was 99.7. But we budget a different amount, 98.5.
So that's.
So that differential between what the actual versus the budgeted.
I've always thought the budgeted collection rate is conservative relative to historical collections that have always been close to
And I think
100%.
that's, yeah, and I think that's,
fine.
this
Well,
this
part of the
reflects
budget
that.
was, supplemental taxes for the cars. More cars are getting registered within the town, but also because of the drive on used cars and the asset, the value of it, the cars have not been depreciating. They've actually been appreciating. So the value of cars went up. So we picked up more revenue in in those terms as well. Unfortunately for the taxpayer.
Yeah, so that's just reflective of kind of the conservative budgeting, let's
Yes,
say.
exactly.
But the actual collection was on par with,
Yeah, 99.7.
All good news. Yeah.
yeah, okay.
Yeah. So the revenues came in over budget of $3.2 million between those main categories that I just mentioned. On the expense side, the town came in, just as the departments was 90,000 under budget. We had some small changes. We are still doing some closing entries and accruals back for fiscal year 22 invoices that are coming in and some adjustments. So we are still doing it so that number will probably change. We have the BOE, we do have, as Sean had pointed out, we are in sync. We just have one more entry we need to make just to bring it in line with COVID expenditures. We had the main savings from the town side was our debt service. That's an estimate when we go do it because we do in arrears versus upfront. So the estimation of the cost and the interest at that time in the budget was higher than what actually came through. So we did have some savings of about 200,000 in the debt service category. So net with the budget of 154.5, we came in at 100. We are coming in at 153.8 that's a savings of 700,000. Give or take, there will be some changes of that as we continue to close the books and go through items.
Okay.
And what that means overall from the fund balance perspective, as you know, it was approved to do 5.2, 5,260,000 was the use of the fund balance for the budget. We will only be using 1.9 of that.
Okay.
So it's basically we're recapturing 3.2 of that on that savings. So I'd ask for any questions on it.
How does that show up on here? I'm just,
On the page where the revenues are,
Revenues, okay.
Second page.
If you go down where it says revenues, fund balance drawdown right in the middle.
This is the first page.
Oh, sorry, I probably have it on the second page. So the page that has revenue.
The revenue.
The revenue
Revenues,
page?
yeah, yeah.
Down middle way down the page, you'll see on the left hand side revenues minus expenditure fund balance drawdown.
Yeah,
If you follow that across,
3.2, that's.
Yeah.
what you're-
that's what we're not using. Of the 5,260,000.
Right.
And some of that is.
So it's the combination between the revenues between the net of the revenues and expenditure.
So what happens to that?
It stays in the fund balance. We don't
Stays in
draw
the
it. It's
fund
been assigned in the fund balance. We'll adjust it for that and then bring it into what the new budget for 23 will be.
And most of it is from that revenue line right above that,
Right.
right?
It
Yeah,
just gets returned to the fund balance.
revenues that are higher
That's,
than.
that's what,
budget.
and most
Yeah.
of that is the budgeting process, the
Correct.
budgeting process for the percent.
Correct.
Basically.
Good.
All right. Okay, so really nothing of any surprise
Substance
or
yeah,
anything
and
like
and
that.
we're, like I said, we're still doing some final entries to try and get everything
Yeah.
in line.
Anything else?
Yeah, so it kind of brings
Yeah,
us
it's
to where,
fairly-
where
fairly-
are we
fairly
with
straightforward.
the ACFR?
Yeah, so then you
the
can talk,
Actual financial statements.
yeah, talk about the audit maybe. And then we'll come back and talk about the maybe timing
Okay, okay.
going forward and, the audit, how that's the status of that, whether there's any issues on time. I know what we talked about before is we decided to delay things basically a month,
Yes,
I think.
yes.
So therefore, we don't have any drafts or anything like that, but maybe the next meeting will have more final or at
Possible.
least complete information, right?
Um,
But I'll turn it back. ahead.
Okay, so I'll start off by saying it's actually been a challenge, just from the environment of resources
Mhm.
and some processes. The finance department on the town side has had some major changeovers, the CFO, the controller. And since then, since I've started, we've lost our senior accountant and our staff accountant, retirements, things like that. So that has been a challenge in keeping up with that. It's a very manual process, so it's all hands on deck for finance to get up that. So we've been challenged with keeping up with everything. We have since hired 2 more people. We have gotten support, the first selectman, HR, we've gotten amazing support in making sure that we have resources, people coming in after hours on weekends to try and help us keep up with that while we hired these 2 new people. So
Temporary people or?
no,
who are they?
full-time finally, we full-time.
Full-time.
Full
yeah.
time, because what my goal was, as these people left, I went in to find out what the job is about
Right,
and how it was done. What are the procedures? How can I change it? Make sure I have separation of duties, things like that. So I got to know what that position was about, and then we replaced it. I've changed it up a little bit.
right.
So now they're in place, but they're in training right now. So
Mhm.
everybody is switching around to make sure that they help everyone else within the department so we can get it done.
So are you fully staffed as
We're
of
fully
today?
staffed now, right
Yeah.
now. Yeah, our last one was hired 2 weeks ago.
Mhm.
And Bill Perret, how do you compare or measure up from a compensation standpoint when you're looking at the resumes, looking at the people? Are we able to have an appropriate compensation level to attract people?
Oh, yes, we got a lot of resumes from all, and HR could attest to it, from all skill sets. I mean, all the way up to masters, to directors, we got a lot of resumes. And I think we chose through the process 2 really good candidates that will complement finance, and I think will be a great resource for the departments. So we're very happy with the hires that we have.
I believe you were saying that one has previously worked for Deloitte, right?
Yes, her.
So that
career-
should go well here among the group.
completely our reasoning for hiring, but she was a CPA, or is a CPA. She started her career out at Deloitte and then moved out to different companies. She stayed home for a couple of years and now she wants back in the workforce. So she's very, we're very excited to have her back, and she's excited to be there. Same with our AP supervisor. She has a lot of experience. She's worked in a different town. And she, I'm just very, very happy that we were able to get these two people in there. Great fit.
So far, so good. then.
Yeah, no, I am. I'm very, I think it's going to be a really good, solid department with all these hires. So that being said, it's been a challenge to keep up with the work.
Yeah.
So my problem is going to be of whether I can hit the deadline. I will be upfront about that, the regular deadline versus an extension. And I know, Bill, you're very much, you want to get it done by December 31st, but I need to put it out there that I would like to get it by December 31st, but I don't want to rush it when I don't have a full scope of all the books. I'm going through all the balance sheets. I'm going through everything. I want to make sure that I have everything in place the way I think it should, and as opposed to just getting something out and not understanding all the numbers. But our biggest problem that we just came up with last month was our fixed assets. Unfortunately, our fixed assets were stored in a test environment. They had a third party. They were outside. They were kept by a third party company. We brought them in-house.
What is this, the register of fixed assets? or-
The fixed, our loaded fixed assets on our books.
Right.
Yeah. It was kept in a test environment in our software system. It was loaded last year into a test environment.
Did you know that?
And what happens is when you want to do something in a test environment, you copy your live to test and go forward. Well, when that first copy to live happened, it wiped all of the fixed assets in the books. So we're now recreating it. And that's where I'm saying I have our budget manager right now. He's our financial system person. He's in there right now loading back up. Thankfully, we have files that we can load it in, but obviously we have to make sure that what we load in matches the ending balances from last year before we start loading in the current year assets. And we have people, helping pull all the assets, all the information, all the invoice, all the things we need. So that's a challenge right now in loading it. We'll get it done, but I'm just concerned of rushing something just to hit the deadline for December 31st.
So you have to
versus
reload everything, starting with the July 1st balances, is it?
July 1st bounce, exactly. And then start,
And
make
then-
sure the depreciation matches
Yeah.
what's been given previously, and then go forward with the 22.
Whose test environment was this? The town or the vendor?
It's our environment. It's our
Right.
environment. Yeah.
So it's just, if you'd like, a mistake or a problem that the town either caused or created.
Well, typically you would, when you do something like that, you would typically take it into the test environment. That is something you would do when you're bringing some from the outside. You don't want to touch your live books. You would take it into a test environment. But what happened was, and it's just an unfortunate sequence of events, that the controller left, the finance director left, and the people that were managing the process left. So it's not, I'd hate to say that it was a mistake in that terms, because it would have gotten into the live, but nobody really realized that that was copied over at the time that we lost it. So we didn't realize.
I guess, from my standpoint, when we get the financial statements, the drafts, you have to feel comfortable with the numbers, and so does the Board of Ed. And so that's the single most important thing. And so, to that extent, I agree with, you got to do what you got to do. But on the other hand, it is what it is. I'm not saying it's your fault, but this is a pretty significant setback if we missed the December 31st deadline. We've been working for years to move from January, February filings to, to a more timely filing. So, I know you're not happy about that, but, I guess at some point we'd have to say we're not happy about that either. I realize this changes. I don't know if Joe has anything to add to it, or Joe, what are you all thinking about this?
Yeah, well, I'm waiting, as far as the process, until I get the information, I can't audit it. So it's just, I think I can talk in general terms. There's a lot of towns that are on extension due to resource or other issues. So I don't I don't think it's the same as when you're on extension before, because you just weren't organized or things weren't closed. So I'm just saying public accounting, you know, I'm down 25% of my staff as compared to last year's. So towns or multiple towns, including yours, are down people. So, you know, so it's pretty consistent. And again, across all firms, there's been more extensions since COVID. So it's not, again, it's not for the reasons that you were on extension before. So, you know, from my standpoint, I can only, it takes whatever time from when I get the information to kind of get through it, audit it, pull the report together. So I'm just kind of in a. All right, you're on.
You're on mute, Bill.
In some respects, it's not for the audit committee. I mean, it really is for Kevin and for Brian to really manage, but you know, public companies, and you could say, well, they're public companies, but they're companies. You know, they got to get their stuff in on time, right? And most people got to get their stuff in on time. And in some cases, that's defined somewhere between 8 days and 3 months. You know, we're talking about 6 months to 8 months. So, I mean, it's pretty significant. So, I mean, I don't know what the audit committee can offer or say about it. But I started out by saying the numbers have to be right. I understand that, but there's got to be. So I don't know whether it's a resourcing issue. You know whether Ann has enough help in general, or what it is. But you know, this is probably not good. But I guess that we have to leave that to Kevin and to Brian.
Bill is Ed Kagas. I think that when the time is right, to me, the issue is not that they can't get it done by December. It's how is it that we had all this information wiped out? I mean, there should have been controls, whether regular controls, compensating controls. When they put these assets into the system, there should have been a backup where that could not get erased. And I mean, if a public company, I'd almost call say there's a material weakness of controls that existed that caused this problem. That's not good. I think we ought to do a root cause analysis when the time is right. I don't care if it's a year from now, and ask the question, why did it happen? Why did we not have backup? And what can we do in the future to make sure this kind of problem doesn't happen again?
And I completely agree with what you're saying and the frustration on it. It has to come down to resources, unfortunately, what you said, with the controller and the CFO leaving at the same time and having new staff come in, there wasn't anyone with that history and with that level of background. So it's something that happened because of losing that history and background. It's not a normal circumstance. So, you know, you typically wouldn't have that many people leaving at one time that of that high level that would be involved in this. And the process of what they did to start the process was correct. You put it into tests and then you go put it into live. Well, the people that were managing it left. So, and new people came on. So that's a hard function to keep that level going without any history or any person that was in that level of control. So going forward, my goal is that every June, when we close the books in June, we've closed the year other than audit entries that need to be done. That could be done within the 2 months, July and August, which we need those 2 months. The Board of Ed needs the 2 months for the ESF report. Then we need to then close so that we're typically done by September. That's my goal to get there. But last year was an extremely anomaly with the year because of the staff turnover and the high level of staff that turned over.
Yeah.
I'm just saying that's, you know, the process was followed, but then the staff left.
Yeah, I mean, I think, and I think we all got it, so we don't really need to
Okay.
drive down. But you know, there is a lesson learned here for the town. You know, maybe not for the finance department. When you have transitions from a department, how do you ensure that you don't lose a step? That's important. But the second thing, Ed's point is, if everybody left, the entire town, there still should be a mechanical backup for the records. They just, you know, they shouldn't be able to be erased. There should be some compensating backup somewhere. Redundancy, you know, it's just like if we had some type of a disaster at the center wherever those records were kept. You know, now what Ed's saying is we really should do a root cause, which I think is probably correct. And, but we're not right now, a little bit later on. So, all right, I guess we can go on.
Do you have the resources to do what's needed?
Yes, I have the people in place now.
Now,
When you say about resources, the problem is when you bring someone else in, you have to train them. You have to train them in your system. So
Yeah.
you just pull, resources you have now, you put in, you bring in other resources internally and you get it done. So that's what we've done. And now we've hired the new people.
great.
Yeah, no, I'm very positive that going forward, we're going to be on a tight ship and, our closing schedules. It's just, we had that 1 year with turnover.
If you can hold that team together, because there's, as you said,
Yeah.
there are staff shortages everywhere.
Exactly.
People are poaching left and right. Let's hope you can hold them together.
Are all of your fixed assets for for 2022 from the internal system? In other words, last year we kind of had the backup of the external
Yeah.
system. Is this year completely? In other words, the outside firm is gone,
Yes.
and so everything is dependent upon the internal now.
Right. And we're confident we'll get it done. We've been discussing how we're going to do it, how we're going to load it, and we have another resource that's pulling everything for us. So we'll get it done. We'll get it done and it will be correct. It's just going to take a little bit longer.
Is that the main reason that you're kind of saying it might be delayed?
Yes, I would say that.
Mhm.
Because we're still doing entries as we catching up with all the revenue and catching up with all the, as I said, it's manual process. We've since changed some of the processes to have bridges between systems versus manual keying, because that causes a lot of, obviously, can have typo errors, things like that. But yeah.
Okay.
Any questions on it?
We can move on.
Yep.
So the other major thing different going on is leases. Is that right?
Leases.
The
Leases.
leases. We have the listing of most of our leases. We're just trying to finalize the smaller ones, copier leases, things like that, and we need a copy of those actual documents. So it's just finding all the documents. So we have a couple more that we need to try and get a hold of. We have Joe's firm had given us a schedule that we're going to populate with that information on the lease so that we can get the numbers that we need to put them into the books as well.
So that none of that has kind of been started yet, let's say, as
No, we
far
have the
as,
schedule, we have the list of the leases, and then we can full forward on that. We do have an extraordinary amount of leases compared to other towns.
is that right?
Why is that?
We have, properties that we lease out, things like that most other towns don't have that level.
Okay. Oh, I mean,
Yeah.
real
Yeah.
estate. Yeah.
Yeah.
Chuck, just remind me, this standard is applicable for fiscal June 23. Is that
22.
right?
The audit we're going through
Oh,
right
right
now.
right now.
standards in
Yeah.
place now,
Okay.
yeah.
So we've got to get it now.
They
Yeah.
had delayed it a couple of years
Mm.
with the COVID.
I know. I mean,
Going
they,
back to the question on leases, why is it that we're an outlier compared to the other towns on leases?
Our level of properties that we have, most other towns will have, your typical copier leases, software leases, things like that. But we have a lot more leases that are real estate based.
So can you give me one example?
Sorry? Oh,
These are leases that we're paying for or
It's
we're
either
leasing
paid
to
for-
somebody.
both ways. We're tracking everything so we can put everything in for it so that the auditors have the whole scope of it.
like the Board of Ed.
That would
They've
be,
been renting?
yes,
Yeah.
that would be a lease. Thank you. I couldn't think of one right now.
Yeah.
So
That's probably the biggest, I would
I
assume.
think so. I hope so.
it's one of the. Yeah. So that's,
So I guess it just intuitively doesn't make sense to me if we have, I mean, maybe it's just a matter of degree, but if we have 130 towns in New Canaan, in Connecticut, and we're the outlier, it'd be an interesting question as to why.
well, I've been in 3 and I have not seen this level of leases myself.
Yeah.
Your typical.
The Board of Ed building
But
is the big Probably the
But-
biggest one, at least.
But
that
you're,
is being
but
addressed.
you were saying not so much from, you know, whatever the smaller copy leases and so on.
Right, right.
But you're saying from real estate perspective.
Yeah,
Is that what you're
properties
saying? Is
we
that what you're
actually
saying?
think- yes,
From a property perspective?
Yes.
Is what you're
Just
talking,
looking
is
at
what
the-
you,
So who is it that actually manages the leases and negotiates the rates under the leases? So for example, you know, I mean, I'm sure the Board of Ed was probably done by Kevin and, you know, that with Brian and so on. But you take, you know, any one of the other leases, is it the department? Is it finance? Is it the first selectman? Is it the Board of Finance?
Well, depending on what the lease is, and it'll come in front of the Board of Selectmen because they're the governing body on contracts. So I'm trying to think of one.
So any lease, would it be correct to say that any lease? Or every
Any
lease?
lease we're
comes
putting-
to the
yeah.
board- To the Board of Selectmen?
There's probably a monetary cutoff before it
There's
goes to Board of
so
Selectmen,
any
isn't there?
contracts that we do over 10 go to the Board of Selectmen.
Right.
We have
And-
a copy.
and-
And we're talking leases, like we lease our, like a Keurig machine, that has to be put on there. It's
What,
small.
sorry?
A Keurig machine or, you know, a
Right.
coffee maker. We're looking, when we sat through a seminar to make sure that we're capturing everything that they want. So they said to bring every lease out there. So we've encompassed everything.
I mean, the main, correct me if I'm wrong, the main accounting is for situations where the town is the lessee.
Yes, yes.
Not,
But we're
not,
pulling
not so
everything.
much where the town is a lessor.
Lessor.
I mean, that might be something that you want to gather along with all the stuff you're doing. But the main accounting is for the lessee stuff, right?
We're pulling every,
That's where you need to capitalize I mean, you're not going to set it.
it's on it so people are aware.
Yeah,
of
I
what
mean,
our
you're not going
liability
to set up a receivable for all the lease payments that people owe you.
is. Not on our books. But
That's what I
Joe-
mean,
Joe,
but-
could you speak to it more from a financial,
Yeah.
standpoint, the higher reporting on the financial?
Yeah, the lessee side is kind of the liability side. So that's usually the main focus, but again, the town seems to have more on the lessor side, and that is a receivable. And that needs to get recorded at present value in kind of your general fund or wherever your lease revenue is. So that stuff only goes on the top statements, but the receivable for lessor is gonna go in the back statement. So in the general fund, or if you had a fund that your lease revenue went, but you're matching it where the revenue is. So there'll be a receivable, but it'll be a deferred inflow because Gatsby just loves to book the receivable and then say, well, you didn't earn it. So it's gonna show on the financials. So asset and a deferred inflow, and then there'll be footnotes that map out the payment, you know, when you're gonna get it, that type of thing. And it's
So
present.
the program that you have, that Ann referenced, your firm has a program that sorts this out and categorizes it, or?
There's two different spreadsheets, one for lessee, one for lessor, and it will do the present value calculation. So you drop in the data and then it'll calculate.
So you could probably, you or Ann could probably summarize that information and give it to the audit committee in a way of categorizing, you know, how many leases we have, what's what the, you know, how many over 100, how many under 10, whatever the cuts are. That would probably be pretty easy to do, I would imagine, at some point after it's all put together.
Yeah, it'll all be on those spreadsheets. So yeah, so it'd be easy to kind of give you a high view of what you have.
Could you analytically compare that to the other towns that are in your system without their names?
Yeah, we're just kind of early in the process, so we haven't had too many. I think I have one client, which is Connecticut Green Bank, which is, you know, they lease a lot of the solar, and that's kind of the extreme. You know, the numbers are huge and the millions of dollars of what they lease. So I haven't had any other local governments provide us a complete set of data yet. So at some point we will have some comparable, but
Okay,
in the process for everyone as far as getting the data back to me.
okay, good. Thank you.
Joe, would it be possible that you could send the standard?
But yep,
And maybe if there's any kind of interpretation that somebody might have done on that, you know, like the firms do, that I guess I'm used to seeing from the FASB side of things. If there's any background information that might be, that might lay out the rules for the government lease accounting.
Okay, so I mean, I've been to a couple AICPA trainings. That's probably those outlines might be a pretty good place to get a high level without reading 100 pages of GASB.
Whatever, if you could maybe just send that around, that would be useful reference. Because I know I'm somewhat familiar with the corporate side of things, but maybe not necessarily familiar with the government lease rules.
The concepts are similar. GASB always got to be a little bit different, but I can send that out.
Maybe they're the same. So is there a timetable on that? And does that seem to be in line with the whole process, the leases?
We'll probably revisit the leases in probably another 2 weeks, because we're in the middle of right now just working out the process for the fixed asset load.
Right.
Because we want to get that loaded first so that we can make sure that's in. And then the lease for us is just populating the information based on the agreements that we're tracking down.
Have we worked out things like the discount rate to use, things like that?
No, that's all. Once we the spreadsheet, that's what we're working with the auditors to work out on that.
Okay, so I think, I think we basically have monthly meetings coming up
Mhm.
at least through December. So, just kind of keep us up to date on
Definitely.
what whether things are progressing. If things are going to come together a lot during the next month, maybe just shoot a little note
Definitely. Okay.
and the status. Are there any sample disclosures also, Joe, that exist with respect to that new standard? I assume they are in the materials you might be sending.
Yeah, there should be. I mean, we have. I can send you what we developed to kind of put into our clients too, but there will be sample disclosures in, I'm sure, the AICPA information and in back at the GASB. But I can send you the templates that we developed to kind of put into our footnotes for both lessee and lessor, or what you would expect to see. So,
Are there any government organizations that have already done that? In other words, have already adopted that can be kind of used as a.
we'll say probably towards the end of the month, because Connecticut Green Bank, I have a draft due today, and the footnotes are in there. Once that draft is all set, which will be before the end of the month, it has to be issued, then I'll be able to send you that one. Again, that one's a lot more complex because they lease all the solar equipment, residential, commercial. So we're talking $80 million in leases. It's a little bit different, but the disclosures will be there. Just you're not going to have that level of detail. So when that's available, I can give you that disclosure once the report is finalized.
Okay.
Just like to make a comment because this kind of surprised me. On the one hand, the only leases I sign are the Board of Ed IT leases, and we do dozens of those. They're financing leases. I can't recall. I think we only have one other real estate lease besides the Board of Ed, so I'm a little confused by the scope of this. If we do, equipment leases for copiers and stuff, I don't know who signs for that. I can't recall signing a lease for it. So I think we need to kind of understand the scope of this. I think it's a little.
Yeah, I think there's two things. One is the accounting,
Mhm.
and then the other is just the process
I don't think we should
approving the leases, whether they're
we may have 5.
no matter which side you're on.
on the
Kevin,
lease.
on lessor side real estate, I mean, it's the movie house. Is there anything
We have
else
like 5 leases. I mean, it's not. They're mostly related to the Playhouse.
to that building? Yeah.
Yeah. So anyway, I think the scope of this is much less than perhaps you.
Yeah, I think Kevin, part probably just a good exercise, as you say, is to really get our mind wrapped around how many leases there are.
Yeah.
And if truly we have, far more than most of the towns, then maybe we have to think about, do we have the right expertise to be, reviewing and managing those leases? If they're reviewed in multiple departments.
But again, Bill, I don't think, we may have copier leases, which are, maybe we have a dozen of those. I can't recall. I don't know who signs those, but I don't sign them.
Yeah. Yeah.
And,
No, it's a fair
also on the Board of Ed side with IT equipment. And I think I've signed dozens of those in the past few years. So.
Yeah. That's good. Joe and Ann, the reason financial statements are going to be late is it just two reasons? Is it leases and fixed assets for the most part? I mean, really, I realize there's other stuff that has to be done. Is that the two reasons why we're going to be late?
I would just say processing as well.
Well, what I was really getting at, was something I asked Joe, I mean, in order to accelerate the filing, is the lease accounting, the new lease accounting, is it mandatory adoption for this year without any wiggle room? Is everybody going to be doing that? And if we could buy another year on implementation, is that possible, or we'd have a qualification or what?
Yeah, it was already delayed a year due to COVID, so it's effective this year, and so it would be an issue because I think the numbers will most likely be material, certainly probably in the back, the top statements of government wide are different, but yes, there's really no more flexibility on the implementation. So it is something that's, again, every town is struggling with. Like you said, it's October, whatever. I think I have one outside the client that I'm auditing now that I have a draft of. I have one other client that maybe has completed that schedule and got it back to me. And so we have to audit. There's calculations and entries that need to get done. So you're kind of in the same place as every one of my other clients, and then like 25 other ones. So 24 of them haven't provided me any data.
Okay, so I think you'll keep us up to date,
Yes.
and anything we can do, and got to make sure we have the right, enough resources to because some of this stuff is manual, right? I mean, it's work. It's not just
A manual process.
it's fixed assets. You're talking about the whole ledger. I mean, that's a lot of stuff. And if that's generating the information for this year, then we got to be comfortable that all the depreciation calculations, all that kind of stuff are right, I think. And then the leases that we have, the right calculations. But if I heard it right, Joe, that is the software that you have, is that like an Excel based thing?
Yes.
Yeah, it's there are other tools out there that the firm has. I think for most towns, this is enough. If you had hundreds of leases, then
Right.
other software, the firm has since, wow, we developed this, like a year and a half ago. At least it gives us the data, and then we figure out whether you need to do the calculation or not. So something that's more, you would just.
You've used it for other clients, and it at least works, right?
Again, for the one that's provided it back to me, yes. Again, in the process of just getting data. The other client, the big client, they did it all Excel based. We reviewed it because it's hundreds and hundreds of residential, commercial.
Yeah. Okay, no, I understand. I know I've had experience with some lease software which everybody puts out, right? And and then there's people that do it internally, and sometimes they're better than others. Sometimes they work, and sometimes they have issues.
Right, because everything's brand new. in place. I mean, there are a few, there's a lot of softwares that literally came out in the last year and a half to deal with this. So we don't know how well they really all work.
Right, but the one that they're using should work, right?
Yeah, so it'll give us the data that, you know, since we developed it, we'll be able to help either way to make sure we get where we need. But we did, you know, we ran test data through it and it generated the data we need to do, you know, the top entries and all that. And just, you know, to relate back to the capital assets, they're gonna have to create new categories for leased equipment, because all the leased equipment now is the right to use that needs to be put into your capital asset software, depreciated or amortized also. So that's the second part of book the liability, but the asset also has to be capitalized and amortized.
Okay. Anything else?
No, that's fine.
So the audit, how could, Joe, could you just summarize maybe where the audit status is and what maybe has been done and, you know, has yet to be done?
Sure. I mean, the basic areas that have been done is our planning part. So a lot of the transaction work that we do, you know, our planning meeting, or all our planning, risk assessment, all that has been done. And then we'll revisit that when we actually get the financial statements, you know, get the trial balance and the report loaded. So it's been basically the transaction work that we normally do, and then some of the single audit work, the single audit testing, the federal and state single audit, that a lot of that work has been done. So, but that's pretty much what has been done. And then we just do, you know, some of the preliminary stuff to set up government-wide that we can work papers that can roll. But that's the majority of the testing that has, you know, that has a big dent in it. So as far as the amount of work. So it's when we call more of the transaction preliminary. Since we don't have trial balances, we kind of really didn't start in that part.
So is it safe to say that, you know, outside of the, you know, what we just talked about, the fixed assets and the leasing, that, you know, the other aspects of the audit are kind of going as planned? No issues, or have there been any issues identified or anything like that?
Nope, nothing's been identified for the, you know, the state programs or federal programs that we tested, and nothing has come up. We're testing ESSER, the big grant on the education side, and ARPA on the town side for federal single audit purposes. So those are the, you know, according to the feds, are higher risk, so they're on the list to be tested, and they're also the bigger dollars. So looking at the testing, and nothing is, we haven't identified any issues or question costs or anything along those lines. And same with the state, which are some smaller programs, a daycare program, County Road. That's the testing on, and there's no issues with.
I was just looking at it.
Okay.
Maybe just go through.
Yeah, maybe we could just spend a few minutes on the government programs, the
ARPA and
yeah,
the,
I
emergency
never can
relief
remember the names.
I think that Andrew has his hand raised, at least I can see it on my screen.
What do you say?
Andrew Brooks has his hand raised. I guess he has a question.
Oh, okay. Andrew.
Hi, sorry, I don't want to detract from the conversation around timelines and audit progress. I did want to quickly address, though, a comment that was made earlier in the session about investment income in the, I think it was on page 2 of Ann's document. You know, I think it is important to provide some context around that, and I didn't want that to not be provided to the audit committee during this meeting. So when you look at that line, it looks as though there's a loss of $568,000. This is because this line, it's my understanding, is showing unrealized gains and losses. And given that our portfolio are largely bonds, you know, treasury bonds, as interest rates rise, the value of those bonds, the market value goes down. However, we hold our bonds to maturity, right? So we never, ever take a loss on any of our investments. We earn a recurring revenue stream from the interest payments that are provided, and we hold them to maturity, and we receive the entire principal amount back at maturity. So I just want to point out that this does not accurately reflect the true cash flow that we receive from the investments. Generally, when you're reporting investment performance, you're not reporting necessarily unrealized gains or losses. But I just want to point out that, I guess, from an accounting perspective, that's why this number looks this way. But I just want the audit committee to be reassured that I am very closely monitoring our investment portfolio. We are well in line to far exceed revenue projections in this new current fiscal year, given where rates have moved and given some of the opportunities I've been able to lock in for the town as I've been closely monitoring the changes in interest rates and Fed policy. So I just wanted to note all that, because I think the implication earlier was that somehow, investment performance is not good, or that there's some kind of large loss on our books. And I just want to make clear that that's actually not the case. There haven't been any realized losses. Thank you.
So
And happy to answer
That'll
questions.
actually come
So
back at, at the maturity of the bond or before that. That so-called bookkeeping loss will come back as a gain, I guess, has to. For the cash. I see Joe nodding his head yes, so that might be the right accounting. Yeah. So, so I think I understood. Good to point that out.
Thank you.
So these are, so the investments are recorded at market. And that shows up as let's say, a loss.
Yeah.
Right, Joe, you mark to market and you book a loss, but it's
Then it comes back.
unrealized and will not never be realized from what
Bill
Andrew
said
said.
that'll come back as income later.
Right.
And Joe, from a governmental standpoint, the intention to hold to maturity, demonstrated by history of holding it to maturity, doesn't allow you to use a different accounting method. You still mark the market. Yeah.
Yes, you still have to. Yep.
Great, thank you.
Also, the average maturity is pretty short, so we had a real change in the interest rates, but that'll wash out.
No, we're in a good place.
Yes, that's why I don't want anyone to be alarmed unnecessarily by the number that's on this page.
There.
What is the associated asset balance?
I don't know offhand. I'd have to get that for you.
Andrew.
In terms of our investment portfolio,
Value
right?
of the bond portfolio.
The
roughly.
one that's generating this loss, let's say.
So
Unrealized loss.
it kind of depends, because it's a snapshot in time. So I'm not sure if this number is reflecting as of June 30 of 2022.
Should.
Yes.
If it is,
would be.
then at that point in time, I believe our bond portfolio was a bit lower. I believe it was around 15 million, I'd say. Right now, we've actually, because of the sharp move up in interest rates and the differential between what we're earning in our money market accounts, which, interest rates have risen substantially. I mean, we were earning 0.1% a year ago, and now we're earning closer, over 2% on money market accounts and well over 3% on treasuries. So our new portfolio balance is like, I would say, $50 million. So we've substantially invested our general fund cash into treasuries just in the last 2 months, as I've seen a huge improvement in the yields. And I've been building a ladder so that we're able to continue to take advantage of these high yield opportunities, by investing in short-term treasuries. So, but yeah, so these numbers are reflective of a point in time where we had a smaller investment portfolio of around 15 million, I would say, but it's grown threefold since then, just in the last 2 months.
Taking a look at the liability side, how much do we have? How much bonding do we have coming up? Over the near-term cycle, and what's the implications on the interest of that? Does anybody know?
Are you asking about the annual debt that we'll be paying?
Yeah.
I'm not
No,
sure.
the bonds, the debt.
So,
Let's say that.
Any new bonding, because what's the implication of the current rise in interest rates on existing bonds and new bonds we might be taking out over the next 12, 15 months? What's the rate compared to what we're paying?
What are the bonding plans coming up?
we're working with bond counsel and our financial advisor right now on getting documents to them so we can start going out for our latest round of bonding. So we're either November, probably won't hit that mark, probably January, because he said right now, January would be a better time because there's a more demand, January to February, for our type of bonds. So we'll probably hit that level then.
And how much would the rates be from the last time we did it, Andrew, I guess? Ann or Andrew, either one.
I'll follow up to get the rates where they are right now, the comparison.
Yeah,
point.
I mean, I assume they're up pretty significantly, right?
Yes.
And what about our current bonds? Are they all fixed rate or floating rate or a combination?
Fixed.
Fixed?
Yeah, they're all fixed rate currently. I had a conversation with Alex Shee, who we've worked with in the past on the refunding bonds recently. I stay in touch with him periodically. He had said that some of the neighboring towns are seeing rates like the true interest cost being around 3 to 3.5% now. Just to put that into perspective, last year when we went out and bonded, I believe the true interest cost was like 1.58%.
Yeah.
So it has gone up substantially.
Yeah. And so, might be good next time we get together, just to understand. I'm sure that the finance committees would be looking at it. What just, someone could just tell us what the maturities coming up are and how, what the implications on rates. That's fine. Great. Okay.
So maybe getting back to our ARPA.
Bill, I emailed you the document that I'm handing out. So I don't know if you've received that. If you want to open it to follow along.
I received it. Thank you very much, Tucker.
Okay, you're welcome. So basically this matrix just takes you through the current ARPA process and the allocations to date. We've had several rounds of approvals, which you can see based on some of the dates that the process that we've gone through between Board of Selectmen, Board of Finance, and Town Council approval. The total allocation was $987,968. We have committed up until now.
And we've received
We actually received all of it. We just
We've
got our
actually
last
received
tranche,
all of
the
that.
second tranche came in too. I think we just got $1 million. Is that? Yeah, the last week or so, we just
And
got
that-
the last $1 million coming in.
Did that all come in by the end of the year?
No, our first tranche came in fiscal year 22. The second's coming in, it has come in 23.
Okay, so we'll have $3 million basically that was received
In
in
total,
the financial statements that we,
oh,
that we're looking
yeah,
at.
2.9 or so. You're
Right.
correct.
just to get through the accounting
Correct,
first.
Yes.
So we'll have three. Is that going to show up as like income, basically
It'll be in the grant fund.
grant
As a
fund,
grant
and then
we
and
received.
to the extent that there's expenditures, it'll show up as expenditures.
Yes. We
And-
had a couple of expenditures
And
against.
to the
it.
extent that it's unspent, some of the stuff we're going to talk about, I think, to
Correct.
the extent it's unspent, it'll show up where in the books
It'll be in the grant fund.
as just in the fund.
Yes, so you'll have the 3 million in for the revenue side of it, and then we had, I think we had close to $1.3 million in expenditures. I just have to verify that, actually, a little
So-
bit less.
So there'll be like 1.7 that will show up in some fund.
Yeah.
To be spent in the future.
Plus the additional 3, yeah, in
Okay.
the June 22.
Sorry, Tucker.
That's okay. So this takes you through the projects that have been approved thus far. You'll notice that there's 2 on hold totaling $550,000. Just more information is needed on those. One is the flexi pave at Meach Park and the other is Town Players is going through the process of evaluating a renovation that they want to do. So we're holding those funds for them and waiting for more information. The highlight, and these are all highlights in my opinion, but we also did partner, as you all might have heard, with the New Canaan Community Foundation to help us assess the needs of local nonprofits and what they needed. They're good at that, right? They're the best at that. So we took advantage of them. And some of the themes of the grants that we covered were arts, culture, tourism, economic development, behavioral health, community support, environment, sustainability, food, and town resources. So you'll see we have, that was $582,000 of grants that we have made available to those organizations. The current balance to be allocated is $447,000. We do expect another round over the next few weeks, probably the final round, waiting on a few more projects. Again, all of these have to meet the criteria of what the plan was intended to do. And so there is a review process. It starts with Board of Selectmen, and then there is a subcommittee made up of Town Council and Board of Finance members that then meet to review it. And at that point, it goes to the Board of Finance for approval and then on to the Town Council. So that's in a nutshell where we are with this effort. As you can see, we started the approvals back in November of last year. Probably we'll wrap up, right around then, if not a few months after that.
Becca, could you just talk to the premium pay line? What that is?
That was I forget what the timeline was, late last year. Decision was made to give premium pay to the employees, both Board of Ed and the town side, set amounts to each employee. So it's their related base pay.
Spread across everyone?
Yes, from the town side.
That worked during the COVID.
COVID.
Yeah,
Yeah,
not selective. It was everybody worked during that period.
Yes,
of time.
During that
Yeah.
time.
Okay, thanks.
And as far as the reporting goes on this,
So we're considered, because we're under $10 million in receipts, we're considered a non-entitled unit, which means we file every year. So we just did a filing April 30th of 22. And our next filing obviously is April 30th of 23.
and that basically just says not much, right?
I'm sorry.
What does that have in it? Doesn't have this.
You can actually go two ways. So the Treasury doesn't want the level of detail under 10 million. They don't really want the level of detail. You can give it,
So
you
you
keep it.
So you don't give it.
No, we give the general description of what it is, and then the dollar amount spent to date. That's it.
Oh, you have to give the amount spent to date.
Oh, yes, we have to show the amount spent to date, but we keep everything detailed anyway, in case they come back in an audit down the road.
And all the funds need to be allocated by December 2024,
24, yep.
not necessarily spent,
Spent.
but allocated by them. So we're right on schedule, if not ahead of schedule.
And all of these fit the criteria.
They do. As I say, they went through the approval process and it's been very helpful in terms of working us through the accounting piece of it. We also worked with our local town attorney to devise a small sub-grant agreement, if you will, terms and conditions agreement on some of the nonprofits. And I've sent those all out. They're all coming back. So those checks should be starting to hit them in the mail probably in a week or two.
And from the Board of Education side, my general understanding is much more detailed reporting. Is that right? To justify what you get, I think. Is that right?
Yeah, what we typically, we've had to, especially with the regard to the ARP funds, had to submit a detailed projection of what we intend to spend the money on. And that gets updated periodically.
And that would be this kind of detail.
Exactly. Similar. Yep. It's all part of it's a software e-grant system.
And something there closed out like September 30th or something like that. Is that right?
September 30th this year?
Yeah.
September 30th this year related to, I think it was the ESSER 1 funds, which I don't think we have any ESSER 1 funds.
Nothing. Okay.
So, but we're in good shape.
Any?
No.
Thank you.
I think.
maybe now's not the time, but when you do get a chance, it'd be good to have a timetable for the financials.
Sure.
I assume you probably don't have that now. Given,
We should have the most current one for 23. We're working on
like
right now.
when will there be, closing the book? When will there be it's not the CAFR, but it's the
After.
whatever the ACFR.
Yeah.
Yeah, ACFR.
At the time, okay.
As to timing, so that if nothing else, have something to work towards, and also, we can all plan our reviews.
I assume we need the financial statements in order to do our next bonding, right?
No, we don't actually. I
No?
talked to a financial advisor. He said we don't have to have final. We can have some numbers that they might need that from schedules and things like that, debt service and all. But he said we do not need final ones.
Government accounting never surprises me.
Well, it's also the strength and pain in it as well, but yeah.
You can finance, you don't even need numbers.
It's not a question you seem like you need to ask, right?
Right,
I
exactly.
just want to know the level of tax collections.
Look, I've got to go to my next meeting, so I'm going to sign off.
Your fund balance and controls. That's their basics.
All right. Is there anything else on the ACFR preparation that anybody wants to talk about? So
Look, I'm going to sign off on you.
Okay.
Thank you. Thanks all.
the next thing we're going to talk about, Bill, is
It's gone.
bye, Bill.
Hey, well, I'm listening.
We're going to talk.
No, so I think the next thing we've already talked about the bonding. I think what
Yeah.
we need to talk about. So the only thing maybe is just an update on the major capital projects, and with probably a focus on funding.
Address this.
Yeah.
So,
And
on
I'm
your agenda-
gonna drop off also for the rest of you.
So,
Hi, Joe.
thanks, Joe.
Yeah, sure, bye.
It's like 10 little Indians.
What's he doesn't know. No, this is forward looking. What is it?
I'll just run through these quickly. The what items on your agenda, the library obviously is in good shape with their building project. They're plan to open it February 1st, I think, thereabouts. Their fundraising is going very well, although they're a little concerned about the market in terms of people meeting their pledge payments.
Yeah.
We've when we delivered our $10 million of the
December.
of our grant funds, and we got the construction loan facility, which they now anticipate drawing down beginning in February. The construction loan facility is simply to fund their pledge payments.
They haven't drawn anything.
They haven't drawn anything yet. They want to, they notified us this week that they expect they want to increase the amount to $10 million. Originally, we started expectation of 1/3 of the project being $13 million. And then they went down to $7 million, but they're a little bit nervous about the state of the market, whether people will make their pledge payments on time. So that's the status of the library. Police station, we've authorized the.
So the 10 million will be.
They expect to draw it down over a period from February, March next year to the end of December.
February to December.
And then most of their pledges for large pledges are 3-year pledges. So
They're just anticipating a slowdown in the collection of
Yeah.
pledges.
Yeah, because people lost a lot of
Yeah.
money.
but I
Us included. Yeah.
they give Ann a cash flow statement, and again, it's surprising that they've gone this far without drawing down any of the facility. but
And
they,
what's the deal on that? So if we give them money, do they pay interest?
they pay interest 0.25% over our cost of funds, and we're going to
0.25% over.
as to what a comparable note that we would issue with costs. So
And how long is that for?
well, they expect to pay draws like within the period of the pledges. So if they expect the pledges
3
to be
years.
paid in 3 years, well, that would be
And if that doesn't happen,
conceivably, if if things slow down, they might stretch out to 5 or 6 or 7 years, but
And if that somehow doesn't happen,
ultimately the end point is 10 years, but
and then if that doesn't happen, then
well, then again, they're doing very well on their fundraising. So this is kind of like speculative as to whether pledge payments will come in as scheduled, as opposed to not having raised the funds in the first place.
what are the
I think
terms?
they have 3 or 4 or 5.
Do they have, what are the terms if it comes to 10 years and they just don't have the money? I'm not suggesting that. I'm not suggesting that, but I'm just saying what happens,
Well, we have
does,
liens on their
do they
facilities.
borrow money externally and then repay the
Again,
town?
The expectation is that they would raise money, continue to raise money.
Probably won't be the problem for any
Yeah.
of us, so.
But we have
No,
liens
but
on, we have
that's-
liens on their facility. So, realistically, if
Yeah.
push comes to shove, we're going to have a conversation about how they're going to,
But there's nothing in the document or whatever agreement
well, we're not going to
between,
foreclose on their facilities, obviously, but we don't want to take over the library. So they'll remain an independent entity. So.
Yeah.
As far as
always a concern because it has happened in other things.
Huh?
It has happened on other things where pledges and so on just don't happen.
Well, again, this community, I'm surprised about their nervousness about people paying pledges, because I think in this community, people generally meet their obligations. So just like we are conservative about tax payments, but we always come in much higher. So
You're not worried.
We're good. We're good accountants.
police station, the architect is working on the design plans, and we've authorized the contract with the architect. We are signing a contract, at least with the Board of Ed's space right now to continue it for 2 years. The balance of the 2 years the Board of Ed had, and the police department will completely occupy 39 Locust after the Board of Ed moves out next June. And so the police station renovation project should start by the next summer, July and August, if we're on schedule.
So does
Will that the whole police department will go there?
Yes. Yes.
so did the lease that currently exists, does that go, did they extend it or did it,
The Board of Ed steps out and the town steps in.
and the lease already
Yeah.
goes that long? So
The
what
lease
would have happened to that if the police didn't use it?
They're allowed to leave under the current lease, provided they move to a town-owned facility. So they,
So they could terminate.
They gave their notice to
So you
exit.
did,
in the
and now you're
meantime,
just going to continue.
We're taking over the lease basically on the town side,
Right.
or the use of the police.
Essentially the same terms. I mean, it probably has
We
escalations.
renegotiated they had really actually 3 separate leases that had we renegotiated I think $29 a square foot based on current market conditions. Is their lease was very old in the base lease. So
So this happens in June next year, does it?
June, yeah.
They move out and police move
So
in.
that leads to 220 Elm, which is the plan right now. The Board of the superintendent's plan for renovations is in the process of being bid out, I believe.
Just about. We're going to P and Z in a couple of weeks. Right. I think it'll hit the street in early November.
Right. So that plan is moving forward to renovate the space on the first floor. The other condominium owner as the second floor. But that's all in the motion to get done so that they can move in next.
Will the second floor be renovated before you move in? I mean, you won't have,
Well, the second floor is only going to be renovated to the extent that a tenant.
yeah, but it'd just be messy if they've got contractors in after we move in there,
Well,
but maybe you can't control
yeah,
that.
I think the conversations they've been having is not a lot of renovation. It's beautiful space, and anybody would be kind of crazy to trash that current space. And so, but the configuration that Board of Ed needs, especially for the education element, requires some demolitions. So significantly different. Waveney, what's Waveney referred to the Waveney House?
Yeah, I'm not sure. What was the waving?
I-
Is that the?
I just, quite frankly, I just put it down because it was,
Which Waveney? I guess Waveney House renovation.
Waving?
yeah, house. That's
Oh,
I know that there were some expenditures going on with respect to that.
It
I
was
didn't know, like the
ADA
elevator,
compliant
for example, stuff like that.
The Waveney, that's going to the Board of Finance next week. Because it still hasn't been authorized to proceed, but I think
Right.
we need to proceed with both the bathrooms renovations, installation, and the elevator. So that will go to the Board of Finance next week. And then
For approval. So,
For approval.
yeah.
Do you have any idea how much the bonding is expected to be in January?
Well,
Roughly.
Considering Ann doesn't plan to finance the library's construction loan, she's going to loan it out of the general fund. So,
Yeah, so I think it's definitely under, it's smaller, yeah.
I think when we talked to Bill Lindsay about 5 million.
Thank you. Yeah, it was a small
And it's
one.
gonna
So-
be
so-
in tranches through the year, but what Kevin says is,
well, again, she would have the capacity to really
Yeah.
go up to $10 million.
It's a
from the
stagger,
general
yeah.
fund if she
Yeah.
needed to.
Yeah.
And I don't, actually, when I said that, they've been indicating before, they don't expect their total balance to rise up to $5, $6, $7 million.
Yeah.
So, the $10 million is an outlier of possibilities.
Mm.
It's more likely they're gonna, borrow $4 or $5 million. It'll last for 2 or 3
Yeah.
years.
So Andrew, are you still on?
Hi, yes, I'm here.
Okay. Yeah, I was just wondering, with expenditures for things like the library and the police station and whatever else might happen. And I'm sure that that's being projected out.
We can earn more loaning money to the library than we can earn in the market because our cost of funds.
Yeah, I was just thinking about liquidity
And
and
Andrew stays very short, even though he's realizing unrealized losses. His average maturity is much shorter than what we would be paying for 5-year notes.
so what would Andrew, what would you anticipate the borrowing might be needed?
So that's a good question. I honestly have not been included in a lot of the conversations around this library loan. I don't know what the terms of it are. So it makes it hard for me to give an adequate comparison when I don't myself know the facts of what this loan would be to, this credit line to the library would be. All I know is right now our short-term yields on, for example, the 3-month treasury, 6-month treasury, even the 1-year treasury, which we have all three, are close to 4%. So if our interest that we're going to earn from the library is less than that, then there is an opportunity cost. But in terms of liquidity, we do have treasuries maturing in the next few months. So if I'm given adequate information and advance notice, I'll make sure to not reinvest those funds, and to hold them aside for the library. But while we hold those funds liquid, I do want to point out money market rates are lower than the treasury rates. So there would be a short-term opportunity cost by keeping them liquid and available for the library to draw down. So that I think that is something we need to consider.
We do have, Andrew, if you remember too, we do also have 10 million in a money market that has not been touched. So that's kind of like our backup in that regards, that we have that 10 million sitting there in a money market. So, and that money market rate is significantly less than what we would get on a taxable bond interest rate plus quarter point. So, if it comes down to it, we can talk to see if you want to liquidate or we have that 10 million.
Yeah, I think to Bill's point earlier, it'd be good at one of our future meetings to maybe just take a look at I don't know, what I would think of as a cash flow forecast that would just show, the need for funds and the source of funds and, kind of where it's coming from.
For
Which
sure.
I assume would be available through the Board of Finance information and stuff like that, just to be able to see stuff that others already have, I would think.
Also, if the if the Board of Finance and the Town Council authorize the funding for the police department, we may bring that financing up forward from what Ann
Right.
just said. So
Kevin, could you update us on the Playhouse?
Playhouse is going very well. The outside renovations are underway,
I saw that. Yeah.
restoring a 100-year-old building to which needed to be done badly. So the outside envelope will be entirely new. The roof has been done before the
Yeah, that's the
brickwork.
town's
The interior
responsibility.
plans with the Cinema Lab, the lessee. We haven't signed the lease yet with them. We have the MOU with them, but we haven't signed the lease. But they've been raising their funds. They expect to close with $2 million locally raised.
And where and how do they raise funds?
They've been meeting with local investors. They have about two dozen local investors that are
Okay.
funding them. They want to be community based,
Mhm.
and so that's been going very well. And we expect to have design plans in the next 2 months, and then go out to bid, and hopefully open by next July 4th. But there's a lot of work to be done.
What are they hoping to, or thinking about spending? Do you have a number? What they got on the interior?
I think the total
Capital?
I think the total is $3 million, and we're spending $1.5 million. They're spending $1.5 million
Million and a half on the inside.
on the
Yeah,
inside.
Yeah. Mhm. Should be nice.
I think that's the capital project.
Okay, thank you. I think the only thing we have listed is the budget process. I assume that's maybe,
Brief synopsis, we just kicked it off. Our budget manager is sending out the documents to all the departments to start the process of getting the information back. He's going to look for it to come back probably the first week in November. Tucker and himself have been going through to set up the schedules on trying to get all the meetings in place, making sure everybody's availability. So they'll schedule out through next year.
basically the same
Yeah, same.
kind of
We just
process.
kicked it off. Yep. Same process.
Okay. I think the only other thing that I wanted to mention is just from the committee's point of view, we wanted to express our condolences to Janet Lindstrom. I think you all know that John, who was a member of the committee for, I think, one term,
Yeah, before me, yeah.
took over from Janet. But in any case, John unfortunately passed away during early September as part of I think fighting cancer for the last year. And so we send our condolences and express our appreciation for all the work. I know not only from, the committee and town point of view, but I know having worked with John here, I also reached out to John's expertise for some help when I was working back at my job before I retired. So he was very helpful with bringing some experiences from his work also. So in any case, I wanted to express our condolences and get that on the record.
Also, I would note that George indicated he doesn't plan to renew on December 1st, and I don't know when your next meeting will be, but it would be in November perhaps.
November.
So that, but I think
And we told him that, we might want to talk about that right in the middle of things. Maybe we defer the change until after we finish the financials.
Right.
Somehow. George has agreed that
We only just learned about it an hour ago.
George has agreed that he
I
would.
have to take a few minutes here to explain my lack of comment today. I was out the entire month of September, and I'm having serious trouble with my hearing. So I apologize for my lack of participation, and hope it'll be a little better the next time around.
Good.
So George will be missed, but maybe, I don't know what can be done, but right in the middle of things, it might make sense to extend a little bit until we get done with the financials.
Did George tell you, it sounds like you, Kevin, knew before we did, and I don't know if Bill even knows, but so you could think about nominating a successor, and is that in the train?
Those terms continue until a replacement is approved.
Good.
So, and it's
Ah,
sworn, so
You can't walk away.
we can go
Okay.
to December and January. Yeah.
Uh-huh.
Yeah.
Are you giving it some thought?
I haven't given it thought because George just told me this morning.
Oh, sorry, you already, I thought maybe you'd known for a while. No.
Okay, good. Anything anybody else has before we?
No. Thank you.
I am, this is Ed Kangas. I just got one question. The town's making good progress on getting the utilities to repair roads, whatever. To the extent we share those costs and we got those properly accounted for?
Ed, Eversource has most of the obligation for roads that weren't due for reconstruction, so that I'd say we're probably 70% on the roads that were disturbed in the last 3 years. And Elm Street, Upper Elm Street by the train station will be done by the end of October. Tiger still here or before the
End of
asphalt-
October.
before the asphalt plant. But and on the other hand, Aquarian is still replacing water mains, and that takes it a little bit longer to repair some of those roads. They're going to actually be working through October and November on a couple of roads. So we don't have a huge liability with Eversource, but we have some more roads to do in the next spring.
Okay, well, I appreciate the update on the roads. It's good to see it again. I just want to make sure that whatever liability we had related to that's booked, and apparently it's small and it's accounted for. Thank
Right.
you.
Thank you. So,
Adjourn?
I
Motion to
think
adjourn?
adjourn. Second. Meeting is adjourned. Thank you.